welcome to another episode of Put It Together live stream. I'm your host, Daniel G. Garza. I want to welcome all of our friends on Facebook, LinkedIn, and Twitter. Thank you for joining us. If you don't mind doing it, will you reshare this with on your page so that other folks can watch it? If you're watching us on YouTube, do me a favor, scroll down, hit that subscribe button and the notification bell. That'll let you know every time there's a new show on our page. And we have new shows on Wednesday with the Christian and Daniel Show, on Fridays with the Card Devo, and on Saturdays with Put It Together live stream at noon. So make sure that you join us for all that. This week, I have a very special guest. She is a good friend of ours. I've known her for a long time. Actually, we're coming on 10 years of knowing each other. Her name is Martha Ormonde. John, I don't know why I said John. Martha Ormonde is the CEO of Martha Ormonde Incorporated and has been operating since 2014. Her company specializes in bookkeeping, paralegal services, and tax preparation. The company's mission statement is giving people peace of mind in a stressful world. She has built her expertise in the industries over the years. On her off time, she loves adventuring or just relaxing with her dog, Bella. And with that, let me bring her on camera. Hey, Martha.
Hi.
How are you doing?
I am doing well, Daniel.
For a while there, you were John. Hi, John.
Well, I really quickly did that sex change and then went back. So, yeah, it was a lot of work in 30 seconds, but I did
But
it.
you did a great job with that subject.
Thanks.
So yeah, I just realized looking at time charts as I was prepping for the show, we've known each other now for 10 years. I just feel like you've always been part of our lives. Like we've known you for so long. We've been through so much that it's I just feel like I know you longer than that.
Yeah, it seems like it should be longer. We've gone through more things than most people do in 10 years. So yeah, it should be.
Well, I'm so happy to have you. And if you guys remember, she was a guest on Put It Together podcast several years ago. So she has been on the show. And I think you did one of our panel shows too.
I believe so, yes.
Right? Yeah. So you were part of the panel shows. So if any of you have been following me for the last 10 years, you'll remember her. But I want people to know more about you because not just because you're my friend, but just as a person, as an entrepreneur, I've always admired your hard work, your passion, your tenacity. Can you tell folks how you put it together?
Well, like any new business, you have to hustle. You're always hustling to get your name out there, to get your work product out there. And for the first, I would say, few years, I had specific attorneys that I would work with, and we kind of grew in that area. So I do work with attorneys in doing bankruptcies. That's probably the main thing we do, personal injuries as well. So it's through different attorney offices that, my office works with. We also do, obviously there's taxes that we do. I do work with another tax preparer in doing taxes. So there's just too many people for any one person to do it. So, but yeah, so pretty much it's just been a go-getting type of thing until you actually fake it till you make it, right? I mean, you kind of have to hustle in the in-betweens and make sure that, you get your name out there. But once you do and, people have that peace of mind with you, then, it all comes in after that.
One of the things that I've always, because I'm self-contract, so I work with a lot of different companies on a lot of different projects, but you've been able to do that and like build your reputation just working with different companies. What's the most difficult and what has been the easiest part of being self-contractor or, yeah.
So I probably the most difficult is, building up your clientele. So, finding people that need your services that are willing to give you the chance to actually start doing it, right? Because there's always a beginning and they always, you always have at the beginning that initial couple months that you have to prove yourself, right? So not everyone wants to give the new person on the block a chance. So it's one of those things. So the hustling was probably the most difficult because you're always hustling to make sure that you can get to the next thing. And once you start proving yourself, and once you have at least a history with other offices of coming through, meeting your deadlines, then obviously, word of mouth travels a lot further than, let's say, advertising for what I do. Word of mouth does that. In other industries, of course, advertising works fantastic for people. But for me, I have found that word of mouth and having other attorneys refer me, or having, just other companies refer me and my work product, goes along a lot further than, advertising it and asking people to trust you.
And which came first? Because we talked in your bio, you're paralegal, you do taxes, but you do so much other stuff too. But what was the first thing, and was that your initial passion?
So my first thing was, I would say the bankruptcies. That was probably my biggest passion in trying to get my foot in the door. Not only just learning, how it goes, the ins and outs of it, but also the different softwares, the deadlines, the e-filing, the working with the attorneys, as well as working privately for people on what everything needed to be done. It was, it was a learning experience for me, and I learned hands on. So that was my biggest thing right there. Was I enjoyed being able to give people that peace of mind, of they can sleep at night because either their credit card debt was falling over their head, or whether they were losing their house and they needed that extra little time to, just catch up. They needed a little help to catch up with everything. Everyone has a story. Everyone goes through hard times, and and sometimes it's just bad decisions, but most of the time it's hard times. Companies close, people get laid off, there's a lot
COVID.
of different things. Yeah. And it used to be, when I started, it was like that dirty secret that no one wanted to admit to ever having to do. And it was shamed on, like, what, do you file bankruptcy? Oh my gosh. So that was probably, my work in progress, was that, learning as much as I could so that I could, be better at my craft, basically. Um, bookkeeping was always something that was the in between. So, it's good to do, but that's mostly just work, right? So that's busy work. That's not anything, not a whole lot changes on that. Once you kind of have everything set up, everything else is just entering, input. So, that wasn't necessarily anything that I had to learn extensively on. And then as far as with tax preparation, that kind of just came next. There's a lot of people, especially when they were in bankruptcy, who had not done their taxes in, a few years, in for various reasons, because they forgot to take money out, and Uncle Sam wanted their money, so they didn't have the money to pay for that. Or and so instead of dealing with it, it was ostrich in the sand, and that never goes away, by the way. Uncle Sam never forgets. So even if you get away for a little while, Uncle Sam never
He'll come
forgets.
back. He'll come back and get you. Which for you, I mean, one of the great things, I mean, and I know how awesome you are because you've helped us with stuff that we deal with over the years. Um, but for everybody watching, one of the main reasons we have Martha on the show today is tax season is upon us, and I think it started on Monday, right? Monday or Tuesday, somewhere around there. Like tax season was. I feel like it's hunting season. Tax season is here. Let's start. And over the last couple of years with COVID, people, with moving dates and changes, and like you were saying just now, people losing jobs, and we've all had to. We we try, I'm gonna put that in quotes, we try to learn and follow the new laws or restrictions or rules, but it gets overwhelming.
Right.
Would you say that the overwhelming sensation is what stops people from doing their taxes, or people avoid them?
I think a lot of times you find that people who avoid them or that don't do them for a couple years is usually because they did not take taxes out of their paycheck, or they were 1099. So there's no taxes that are taken out of your 1099. And so they feel like, oh my gosh, I'm going to owe all this money to the IRS or the franchise tax board, or, and they don't do it because they don't have the money to pay it. Maybe they're just barely making ends meet. Maybe they just use the money on frivolous things. It really doesn't matter. It's usually people don't have the money to pay Uncle Sam, so they get overwhelmed and they don't want to deal with it. So years can go by in that kind of mental thought. But the unfortunate part is that Uncle Sam won't forget. You will have penalties. If there is money that is owed, there will be penalties and late charges that are associated with that. And if Uncle Sam really wants to, they can, pull the money directly out of your account. There is not anything that's going to stop them from doing that. They don't have to take you to court. They don't have to do anything. They could just say, oh, look, Daniel, you have $500 in there. Guess what? You owe us $1,500, so we're going to take that $500. You still owe us $1,000 and probably more because of the interest and penalties, but we're taking that. So it doesn't matter if you were going to use it to make a car payment or rent or whatever else you had that you were saving that up for, because they come first as far as they're concerned.
Gotcha. So let's start off with this. Well, for those of you watching, if you have any questions regarding taxes or filings or maybe some new rules that you don't know about, we're going to talk about those too. But let's start this off by, what are three things that we tend to do wrong when we're filing our taxes?
Well, filing them or before filing them?
Okay, let's start before filing it, because I'm guilty. Like now I know. Okay, now I know a little better. Like I try to save receipts that are important, and
Right.
or, like I make sure that all my W-2s are in the same spot, so that when I need to turn them in, I got them all.
Yes.
Because I used to be horrible. I would put them in one drawer, one would be in the car, and then when time came to file taxes, like trying to put them all together would be. But
and remembering them all.
and
Because
remember,
if you forget one, then it kind of makes everything null and void, right? Because then Uncle Sam's going to come back and be like, you made more income, and now were you hiding it?
yeah.
Did you forget about it? What's going on?
So for those of you like for me that I subcontract and I work different projects at different times in the year, sometimes it's in a year I can work with 2-3 different companies a month. So that adds up, and to try to keep track of all that, and I'll admit I'm horrible at keeping track of what I work for. So I have to go back on my calendar at the beginning of the year and go, what did I do January of 2021? Okay, so I've already said one mistake. One mistake is I don't keep track of my stuff. But what are the other mistakes that folks make?
Well, I mean, and it depends. So if you are a W-2, which means you get a W-2 at the end of the year and you're an employee of a company, some of the mistakes that people make is they put too many dependents on when they fill out their, what is it? The I think it's the W-9 form. They put in there too many dependents, so that you may be single, and they kind of are tricky that way, because if you go by the instructions, it says add this, add this, add this, and then put your total here. So sometimes you have 3, right? So it's taken out for 3 dependents. But when you come to do your taxes, you're going to owe money if you put that you have 3 dependents, because they're taking out less taxes in your check, which means you will owe more money at the end of the year. So if you are single, you have no dependents, you have no children, you should always be single 0. that, yes, it takes the most taxes out, but you also won't end up owing at the end of the year. So the biggest problem is to make sure that you fill that initial form. And usually there's different companies that do it different. Sometimes you can log in and you can make your changes on your exemptions on the dependent side of it. Sometimes you have to go through HR. But either way, if you see that they're not pulling out enough taxes, and it should be 10% for the IRS, which is, which you should see on your pay stub, and 10% for the state. If you don't see that being pulled out, then you need to call HR and you need to fix that. Because the biggest mistake is that people are like, well, I don't know. And you tell us this already, the year is already passed. And now you're in February trying to do your taxes and no taxes were taken out, or very little taxes were taken out. And then you end up with a problem because you didn't realize it and you weren't keeping track of it because you assumed that you fill out the paper correctly.
Gotcha. But let me see if you can clarify this for me. As far as federal tax, that's countrywide. That's Uncle Sam
Yes.
across the country.
Countrywide.
Nationwide, and nationwide, everybody falls under the same rules and regulations.
Yes.
Whether you live here or in New York, federal law is the same for everybody.
Yes, correct.
Now, does every state, as far as you know, does every state have a state tax?
No, not every state has state taxes. Like Las Vegas don't have state taxes. They only have to do their federal taxes.
Gotcha.
Okay. So there's different states that you don't have to do taxes on them. So each state's a little different, and your taxes for each state is going to be different. The forms are different. What they take out, what they want is different. It's kind of up to each state how that goes. So the federal is the same for everybody, but the state will be a little different tweaks depending on what each state, determines is the best for them.
So we have our first question on the board for you. It says, what do we need to save or electronically save to prove our deductions for personal and business taxes? I assume not a shoebox full of receipts.
So what is usually helpful as far as, taxes, especially for business or, and that means self-employed or corporate businesses. If you're a small corporation, you want to follow along the same rules. It's usually good to have somebody who actually does bookkeeping for you, because then they can, reconcile everything every month. Basically all the expenses, the income that comes in. And then at the end of the year, you'll have a nice report that has all your expenses and all your income, right? So it makes it easier. Now, that being said, the way you get those is from receipts. If you're using cash, if you're using a card, my suggestion is always like get a card that you specifically use for your business. So if it's, if you're opening a business account, like a checking account or a savings account for your business, always try to use that card. Even if you have to transfer money in because it's in between or whatever, if you use that specific card, then everything on there, whether you have the receipt or not, everything on there was paid. And that's all expenses for your business.
Oh, so that makes it easier to claim everything because it's on that one account,
right?
Versus paying cash, paying with another card,
right? And that's the thing you have to worry about is that, when it's in your personal account, and you can still use it in your personal account, but you're going to you do definitely want to keep the receipt if it's in your personal, because now you have to prove to Uncle Sam if you get called on it, because you don't need to turn it in with your taxes. It is only if they write you a letter basically and says you're being audited for this amount, and how much, of this amount, how much is it that you actually used on your expenses, and you have to prove that. Okay. If it's in your personal account, you have to prove that it wasn't personal expense, it was a business expense. So it's a little more difficult. So it's always a good thing if you have, even if you're self-employed, to open a different account at a different bank, not the same one that you do your personal, and have everything come through there, because then it makes everything accountable, and you can say, well, this is the account. I use only this account for any of my expenses. And you can prove that by your bank statements versus having to keep every single receipt, because that gets overwhelming.
Gotcha.
But there's also, a million apps out there that you can keep track of receipts. You can keep track of, anything that comes in that's business wise. You can always do that as well. And they'll keep track of it. And at the end of the year, you can print out, usually it allows you to print out, like a little spreadsheet of what you paid on for what. But as far as like gas for business, you want to keep track of your mileage. Mileage will work better than gas receipts.
Ooh.
Yes, because mileage, you actually get, I think it's 55 cents a mile right now. And that actually works out to be more than what you would get just in reimbursement of gas.
That's a good pointer for everybody out there.
Yeah.
Does it matter the size of the business? As we're talking, does it matter if you're like single owner when you do everything, like people who are like small bakers or crafts people, it's just their business, up to like people who own a company with a lot of employees? Does it matter how you keep track of all this information?
Well, obviously, the bigger your business is, the more organized you want to be, because you're going to have a lot more receipts. You're going to have a lot more people that are providing you receipts, right? So if you have a business that you have 5 employees at, those 5 employees may have different things, right? They may have, their food receipts that they're taking out people, marketing stuff that everyone's kind of using the receipt or the company credit card or whatever it is that they're using. They have to be reimbursed for this. So you're going to have 5 people times however many receipts that you're going to have to keep track of. That gets a little overwhelming, especially at the end of the year, because you can have boxes of receipts, right?
So, should you do this for your, like, let's talk COVID, because obviously COVID had a lot to do this last couple of years with taxes and people starting their own businesses. So if John Smith started his business, let's talk to John now. If John Smith started his business this year, whether he was a registered business or not, does that make a difference?
No.
No. So
No.
whether you are a registered trademark or not, you still have to. You still should do this.
Yes, because even the self-employed people, you're a gardener and you go to different people's houses and you don't really have a business, you're just a gardener, right? But they're paying you cash or check or, whatever it is, then that's considered self-employed. Okay, so if you're self-employed, you don't really have an actual business per se, like a business name or a business, logo or any of that stuff where you had to get, incorporated and you did this and you did that to get that business. You're just Joe Blow. You're just John Smith cleaning someone's yard, cleaning, 10 people's yards a week, times, 4 weeks. So this is how you make your money, right?
Gotcha.
So you still want to do the same stuff because it's not just all free and clear, right? You still have to put gas in your lawnmower so that you can mow the lawn. You still have to put gas in your truck to get to point A, B, and C. You still have to put, maybe you have to get another, the weed whacker because yours broke. So you have to pay for that. And then what if your tire, get a flat tire and you have to replace your tire on your truck that you're working with? Then there's that. So there's always expenses, always. There's never a company where you're like, I'm free and clear, I don't have any expenses. That's not true. There's always something, even if you work from home. Like I work from home, exclusively. So, what ends up happening is I have internet. I have to pay for my internet or I can't work from home, right? You have laptop. What if your laptop breaks? Or what if your laptop is so old it doesn't run or doesn't, have enough memory to update to the newest systems that are always coming out? You need money for that. You have to have money for your electricity and for anything else that that you use throughout the day. So there's always expenses and overhead. It may seem like, well, I mean, it's rent that you pay anyways, right, to live there, but that portion that you're using for your business, you can totally write that off.
And that's really important because so many people went to work at home over the last couple of years that like we stopped going into an office. Well, for those of you who work in office, I haven't worked in office in years, but working in office, you stop going to the office to work and use their internet, their electricity, their supplies. Now you're at home purchasing all this for yourself, using your home internet, using your electricity. So that's going to change for a lot of people, right?
Yes. Yes.
Yeah.
The only exception would be if, let's say, you work for a big company. I know I have a friend who she works for a big company, and she does their like bookkeeping stuff. She does accounts. I think it's accounts payable. They actually pay for her internet, right? So if you have your company that's paying for your internet or is giving you the laptop, then obviously you can't take that as a write-off. You can't double dip because it's not yours.
I was going to say, you can't double dip on stuff. If they'll find it. They'll find out that you're double dipping.
Uncle Sam will figure it out eventually. I mean.
All right, we have another question for you on the board. And
Sure.
it says, how do tax attorneys work? What if one has exhausted all ways to obtain a return and needs to take legal action to kickstart the IRS to complete the transaction? Can you do that?
Okay, so tax attorneys usually are for the people who owe various amounts of money for years, and we're talking in lots of money. They do offer in compromise, or if the IRS is taking you to court over something. And usually these are more of the big businesses that they can nitpick, and you need someone that can go through everything to see what it is that what they're trying to say and how to prove your stuff. So there's always that complication with tax attorneys. I'm not sure what you would be trying to complete as far as the IRS transaction. That would be, that's, I guess, where I would be asking you more questions on that. If you need to go to a tax attorney, it's either usually for most people, like individuals, it's because you want to do an offer and compromise, which, by the way, like most tax preparers can do that as well. But, by going to an attorney, you actually have the peace of mind of going to the attorney and them dealing with the IRS exclusively, right? So that's always, if you have the money to go to an attorney, that's always the best option because they deal with the IRS, they deal with the franchise tax board on a daily basis. They know the laws inside and out. They know where you can find a loophole and where you can't. And, usually they have some kind of, good interaction with the IRS, or at least with certain people in the IRS or the franchise tax board that may help them get to, at least your stuff reviewed and, maybe be a little more lenient on you. So, if you have the money to go to a tax attorney, you always want to do that first. As far as, I don't know what transaction they would be doing, because to do taxes, you don't need to go to a tax attorney. That would just kind of be over above the top. And most tax attorneys, I don't know very many of them who do taxes. They usually are for the problem after you did the taxes,
Gotcha.
So you get that infamous IRS letter that says you owe $100,000, and you're like, what? Like, and you pass out, and then when you wake up, you may want to call an attorney at that point.
Gotcha. All right, so we have another question. Do business owners need to transfer ownership of vehicles to their business? How do business owners have electronic, etc., in the company name? Those are two separate questions.
So as far as that goes, you can transfer like anything, like any title on your car. And if you do want it to go through your business, you do have to do a transfer of ownership. At DNV, I believe they do have like paperwork and such that you can fill out and do a transfer of ownership. So it would transfer from you personally, like Daniel Garza, and then it would be transferred into your company. And, and then obviously you turn the paper into the DMV and it'll get transferred. They'll send you the new registration that'll have your company name. The other way would be when you buy a new car for it to be bought in the company name. But the problem with that is you also have to make sure you build up your company credit, which is like building up your own personal credit, right? You probably have to start off, you probably cannot start off buying a car just outright in your company. You probably have to start off with getting, let's say, a credit card in your company name, and then, keeping that going, making the payments, doing this, everything you can to build up that. Once you build that up, then yeah, it's like anybody else, you'll be able to purchase a car. You may have to personally be like the co-borrower, but at least it'll be a starting point for you. But yeah, any kind of houses, vehicles, even electronics, electronics, you can, there's usually not a registering portion on the electronics, unless you're using your company credit card to purchase, let's say, the laptop or whatever else. And then of course your warranty is going to be under, your company name. So that will always be part of it. There isn't a huge reason to transfer like your existing stuff into your company name, because electronics is electronics. You can still write it off on your company, as far as, electronics go, even if you're buying it personally. Again, as long as you're not double dipping, you cannot write it off personally and write it off on your business for the same thing. You can't have the laptop and write them off in both places, right? That's double dipping. IRS will not be happy with that. And they may ask for you to prove that you have two different laptops, one personal and one business. So, so those are the different things. But the secured things, which would be house, car, something that has a debt that has a secured actual tangible thing attached to it, those you would either purchase in the company name or you would transfer it. After you've purchased it in your name, transfer just the title of it. In a house, if you have a house that you're paying on, you may not have to refinance the house, but what you can do is like the deed of trust. You can put it from your name, you transfer it to, your company's name. And then once you record that and you file that, now that house is in the company's name, even though the loan is still in your personal name, the company at least is in your business. And that's kind of the same thing with like a living trust, is you always want to make sure that you transfer that into the business or into the living trust, because if something happens to you, right? If you, let's say on your business, right? If something happens to you and there's multiple people in that company, you have the CEO, the CFO, and the secretary, right, of the business, and something happens to you, one of those other two people still have access to all the car or the house or whatever it is you put in there. Now, if it's still in your name and something happens to you, well, then, it's yours personally and not the company's. So the state will look at it that way. It's the same with the trust. If you don't put it into the trust before something happens to you, and you pass away, then what happens is it goes into probate. Like anything else, it's going to go to probate. If you don't have a will, it goes to probate. It doesn't get left to your kids unless you have a will or a living trust, that you can put everything in, and then everybody can get their piece of the pie from that trust.
I really thought that things like that were automatic, that if you passed away, immediately the family gets what you, or your partner, but you have to write everything down, right? You have to have everything down.
Yes.
So just
you have to have that.
To clarify for people out there, when we talk about double dipping, in case you have never heard the term, is you can't claim or charge for or ask for refunds for the same thing twice. And this works not just in taxes, but in different aspects of life. Like I can't claim two different things. I can't get a refund from Martha and then go to Christian and get the same refund. That's
Right.
stuff dipping. So watch out, folks. I've heard of people. I have examples where people try to get away with that, and they're like, no, 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 no. And then they come back and check everything you've done.
Mm-hmm.
So, your audit, what they call the
For
audit.
years.
Yeah.
For years. And it's not even for the 1 year. They at that point, they're like, you lied once. How often did you lie? And they could go 5 years back. They can go more than 5 years back, but they'll go 5 years back, and you have to prove every single expense in those 5 years.
You brought up a good thing. Is it true? I'm gonna throw some myths or some facts. I'm gonna throw some lines that I know, some things that I know. Tell me if it's true. Is it true that they only go back 7 years when it comes to taxes?
Usually. But if you haven't done your taxes for that year, we just had someone that came in and he said he had not done his taxes since 2014.
Wow.
2014. That's a long time of not doing taxes, right?
Yeah.
So now his 2014, when we put in his 2014, the 7 years will start from when they receive it now, right? Because he's just doing it now. He didn't do it in 2015. He did it now in 2022. Wow. So you have to be really careful about that. And I mean, honestly, Uncle Sam can do whatever they want. And they'll pull it out from like their behind. Because I'm telling you, in bankruptcy, in a chapter 7, if the tax debt is older than 3 years, right? Then it's dischargeable. You can get rid of it in a bankruptcy, but it has to be older than 3 years. And that means you had to file those taxes at the time that they were due. Because if you filed them last year for something, let's say in 2014, you're still going to owe that money because you just filed them.
Wow. Is it even possible to go back that far and be accurate in your filing?
Well, you can go back that far, but if you get a refund, they're not paying you for no refund, right? So you only get paid, Uncle Sam will only pay you up to 3 years. Oh. So if you haven't filed in 3 years and you think you're going to get a refund, or your tax person's like, I can get you a refund, I can get you all your money back, blah, blah, blah. If it's that 4th year, you won't get it. It won't matter if they get you a refund.
If you had a refund, you won't get it.
Gotcha. Right. The only good thing about that would be that you don't owe them, right? Because the IRS or the franchise tax board, if they do the taxes for you, everything is basic. You get standard deduction. They will not take anything out for anything, and you will owe money. They do it that way for a reason. You will owe money. That's a penalty of you not doing your own taxes.
So let me ask you, what is the point in this example that you're sharing with us? What is the point of catching up now?
Well, so that the IRS or franchise tax board won't do the taxes for you, because they will show that you owe money. And even though they won't give you the refund if it's older than 3 years, they will surely take any money that's older than 3 years, and they will apply all the penalties and all the late charges of you not paying whatever it is owed. So it's still beneficial for you to do it, even if it's older than 3 years, because you want to get that taken care of. Because if you do owe money, I mean, you can owe like $50, but by the time the penalties and the interest hit, you may be owing over $500.
Wow. Yeah. So
yeah.
Everybody out there. So let's turn this around a little bit. Best case scenario. What? Because we want to give people some hope as they're coming to you.
There's always hope. There's always hope. You just have to.
What does the ideal client, what will they bring with them when they see you? That you grab their stuff and you go, oh my God, you have everything I need to do your taxes.
So the ideal client will have all their W-2s, okay? They will have any 1099s. And the 1099s could be from jobs that you have done, right? That you were an independent contractor, or they can be from your savings account or checking account, because they will 1099 you for any money that's left in the bank, right? That they've given you interest on, right? So they will send you a 1099 for that. They will send you usually a 1099 if you have paid any kind of like student loans. They'll send you something that says you've paid this much of interest. So anything that you get, and they're usually really good, where it'll say like important tax, tax form, included or something. Usually you want to take all of those, whether you open it or not, just put them all in one area so that you find it. So when you go to your tax person, you have everything with you. If you have a house, okay, you will be getting mortgage interest, right? That you can write off. You can't guess. You need the actual form that tells you exactly how much mortgage interest that that you have paid into the system. Because that is something that gets sent to the IRS, so they have the exact number. So if you are off, over or under, that's going to take longer for your money to get to you, and they will send you a letter and say, oh, we can't do it because you were wrong. They won't change it. They will make you change it. So now it's that much longer. So now you have to go track down your tax preparer to do an amendment, which you may or may not be charged for, because if you didn't give them the information, it's not their fault that they didn't put the right information in there.
Yeah, didn't that happen to me several years ago where we sent something off and something was missing, and then I got the letter back, and yeah, I remember that. And I remember getting that letter back and being like, oh, I didn't even open it. I was just traumatized by it. Just the envelope itself was traumatizing. So, but it's really good that you're saying that open, grab the letter. During this time, folks, don't throw away any envelope unless you open it if you are expecting several 1099s or W-2s. Because I've also done that in the past where I knew I was missing one and I just didn't open it, threw it away, and I had to wait for them to send me another copy,
right?
Which now delays because they're busy too doing their stuff, the company that I work for. So it took longer to follow my stuff. So yeah, very good point.
Yeah. And the other thing you want to you definitely want to do is you want to make sure that that you do have everything. Oh, I was going to say cancellation of debt. Credit card says, oh, we canceled your debt. And you're like, score, they canceled my debt, right? Yeah, you're taxed on that. You're taxed as income on that. Because just because they canceled it, so they're taking a hit on it, a minus. If they're taking a minus, you have to take a plus. So the way the IRS sees it is that that's income for you that didn't take any taxes out on. So I have an example. I have a cousin who she got a loan modification on her house, right? They did they dropped her mortgage by $99,000.
Wow.
Yeah, that's fantastic, right? Anybody would be ecstatic.
But
and at the end of the year, she got a 1099 for $99,000 on top of her W-2 income, which was probably like $42,000. So now instead of making $42,000, she made $141,000.
Oh wow.
Yeah, it makes a big difference. And you have to remember they didn't take taxes out of that because that wasn't real income, right? So there's no taxes taken out. There was none paid. You still owe taxes on $99,000.
Wow. So and that applies to people who forget, like
Credit cards.
Prizes, like if you win
prizes, yes.
Yeah.
The trips you win from the radio, not free.
Right? Because I especially like here in Los Angeles where we have game shows and people go to the shows and win stuff. They don't realize that they will be taxed on all these prizes that they win.
You win a car at a game show? Yeah. You have to pay taxes on that car.
Yeah. Because if you
whatever the value of the car is. So even if it was like, I mean, we all know what's the least valuable car out there is probably still going to cost you what, 20,000? Yeah. So you have to pay taxes on 20,000, not only in the federal, but your state, whatever state you happen to be in.
So as long as we're talking about okay, so we're talking about a perfect client is going to have W-2s, 1099s, any award letters, anything that got paid off. What else would they need to bring with them?
So they need to make sure that like I said, the interest that your bank sends you that says this is for your tax form, you want to make sure you have, any payments that you made for your student loan. They'll send you something saying this is the interest that you paid on it. And that's important because that student loan is a minus off of whatever your income is. So you're getting credit for that. So you do want to take that. Unfortunately for your, bank account one, that's interest that you earn. So Uncle Sam will tax you on that.
So can you give us, because we're down to the last 50 minutes, but this went really quick.
Right?
Can you give us your description of a dependent? Because people sometimes have confusion on what a dependent actually is.
Okay, so a dependent, there's two different types of dependents now. Dependent could be someone that is, obviously someone who is your child, right? Living with you, and sometimes not living with you 100%, because most people, parents who weren't married or maybe divorced, usually have some kind of agreement where one takes them 1 year and the other one takes them the other year. That way it kind of keeps it even and fair. Not everyone does that though. So a dependent would be like a child that you are providing for, right? And if they are under 17 years old, you get a bigger credit than a dependent who is 18, 19, 20. Even if they're in college, you can still claim them. But we're talking now, we're going from a dependent who is worth, under 17 is worth $3,000. This year, they're worth $3,000. Whereas once they're 18, they're worth $500.
Okay.
It's a big difference. You can still claim them. Now, the 18-year-old can't be working full-time, obviously. If they work, they have to be under a certain amount. And I believe it really has to be under like 6,000 that they earned for the year. If they earned any more, you may not be able to claim them, right? You do have to talk to your tax preparer who is doing your taxes, so that they can review the whole thing. If you have an elderly parent that lives with you, you can claim them as well.
Oh.
Even if they're on Social Security, you can still claim them because you're the one who's providing the support for them, right? But they have to be living with you, and you need to have, of course, their Social Security and such. And, and really they can't be working. If they're working full time, you can't claim them as a dependent because they need to be able to do their own taxes and claim themselves. If you have your niece or nephew that happen to be living with you because their parents are maybe in a hardship that is not stable for children, you can claim them as long as they're living with you. You have their social, no one else is claiming them. So you don't want to have two different people claiming the same social for a child, because then not only will you not get your refund, you'll have this whole huge issue that you have to prove that the child lived with you.
Gotcha. How about pets?
I wish we could claim pets. If you could get a Social Security for your pet, let me know how it's done, because so many people want that.
So that was a really good answer to a question that I had. In order to claim somebody, they must have a Social Security number.
A Social Security or a TIN.
Okay, gotcha. All right. So this is about the point where I asked my guests to share some words of wisdom with the audience. Martha Ormonde, what words of wisdom do you have to share with us?
Take taxes out of your paycheck.
Everything.
If you have a 1099 job that you can't take taxes out, then you definitely want to be very aware that you might end up having to owe taxes. So keep money aside, specifically just for taxes. Open a separate account and put money aside and say, okay, this is not going to touch this, make it a savings that's with a totally different bank. So it kind of, you can't transfer funds or anything, and just put a little money aside. If you don't need it all, who cares at the end of the year, right? That's like a refund. But that way you have it so that if you do owe taxes, you can pay them right off. Because even if you make any kind of payment with the IRS, they say, okay, you can make a payment of whatever, 500 or not $1,000 a month or something, right? They're still going to tack on interest. So you're still going to end up at the end of however long that's going to take to pay them off. You're still going to end up paying more. So you want to have as much money as you can to make that initial payment, or even just a good chunk of money to send to them and then be like, okay, I'll make payments on the rest. But it will make it easier that way. You definitely want to either get an app that takes your receipts. You can take a picture of your receipts. And that it keeps a log for you, because that'll be so much easier than keeping your receipts. Because unfortunately, also receipts fade. So if you can't read it, the IRS can't read it. And I'm not sure that they're going to take that into consideration. Right.
And I'm glad you said that about payments too, because several years ago I had to pay back. And when I got the initial letter, like I owed like $400 or something. I was like, this is when I was on disability. I was like, ah! But there was a phone number, there was an email address. So I made sure I connected. No, I think it was a phone number. I called, made arrangements, and they're like, how much do you think you can pay a month? And then they sent me a letter, and I just made monthly payments. But it wasn't as stressful as
right.
But I was afraid of calling, and once I called, I mean, yes,
right.
they're tough. Well, they'll work with you if you need to.
There's always exception to the rules, because they're very tired and they've heard everything under the sun. But if you ignore it, where they're sending you threatening letters, then they're more likely to be short with you and not really want to work with you. So it's always one of those things. You always want to open, especially IRS and franchise tax board. You always want to open the letters, and call them and talk to them and say, look, this is what I'm up against. This is this, or I need payment, or I need, help. And, I mean, yes, you might get a heartless person, but chances are you're not going to get a heartless person, because at least you called and didn't ignore it. Yeah. The ignoring is what I think gets under their skin, and then it gets you in trouble, because then they just take the money, and IRS is not going to put money back. Just a FYI, they're not going to put money back. If they take it, they're not going to say I'm sorry and put the money back. Yeah. And they will take it from any account that has your social attached to it. So if it's your son's account, they will take it. If it's your mother's account and your name's on it too, they will take it.
Wow.
So it's very important that people understand that ignoring a problem isn't going to make it go away.
And I can neither confirm nor deny that I cried on that phone call, but if you can shed a tear, it might help your cause. I'm just going to say that.
Yes, it might.
And then finally, the IRS is not going to ask you for gift cards to make a payment.
No, they're not. IRS is not going to call you and tell you screwed up, and we have a warrant for your arrest. Which, by the way, I did get a call a few years ago where they were like, "We have a warrant for your arrest," and I'm like, "Well, then come and get me." I don't know what to tell you, because they're not going to call you. It's not the IRS who's calling you. They don't have a warrant for your arrest. The IRS will go and take the money out of your account. They're not going to come and arrest you. Unless you're making millions of dollars. Yeah. If you're making millions of dollars, they may arrest you.
Yeah. My thing would be like, I got a call several years ago, and they started to like, is this so-and-so? And it's like, can you confirm your social security number? And I was like, 123-555-2431 or something. And they're like, are you sure? I'm like, yeah. They're like, we're gonna come and arrest you. I'm like, well, bring lunch. I don't know. Like,
You're like, I'm hungry. I like tacos.
Get tacos. Get tacos on the way. It's going to be a while. So yeah. So for everybody out there, you don't pay the IRS back with Walmart gift cards. So
Yeah,
don't
no.
do it.
The IRS will send you a letter. It will be a letter. It won't be a phone call. It won't be an email. They don't have time for that. They don't care about people that much. They're going to send you a letter, and it's usually a form letter that says, you better call this person, and they'll have a number, but it is an IRS letter. They will not be calling you, and they are not going to be sending arrest warrants out for you, especially if they've never sent a letter. If you've never received anything from them, they're not sending anything to you. They'll send you multiple letters for a while before they try to do anything drastic.
Yeah, I remember I got that one letter and I was like, nope, I'm gonna call. And I was all stressed out. And once I think it was a lady that I talked to, and I was like, look, and, my disability, and it's, I work extra just to make more money, but what can I do? And again, I can neither confirm nor deny that I started crying. and she was like, it's okay. She's like, you don't have to pay it all back at once. She's like, what? Let's work on this. Let's. And then I think I went on the website and you can pay electronically, and
Yes.
it's so easy. That's the one time you can go online and do stuff. But
Right.
it was so easy. Mail-in versus electronic. Is there a difference? Is there something better?
So mail-in is definitely slower, right? It's definitely slower. I know that sometimes the tax preparer I work with, he has them mailed in because of some of the exemptions that he uses. There's IRS use a third party to do everything electronically. So if the numbers are a little more than what they approve ahead of time, doesn't mean it's wrong or right. It's a limit that they have. So sometimes it will reject it. So like with the guy I work with, because he's usually itemizing a lot of things, with that, it's mostly mail in. But there's a lot of different ways you can do electronic. Even if you want to do it personally, you can do it electronic. I know the state usually, they have where you can do it for free. Put in your information, you can file it electronically through the state. Well, okay, through California. I don't know if every state has it. Through California, franchise tax board, you can go in and you can put in your information, do your taxes, and submit it via that way. Most other places you're going to be paying, it depends on how much you're paying, depends on what they're doing. Just always be careful and always review everything on there on your tax form. Make sure your social's right, your kids' socials are right. Those are the biggest things that are easy to transpose and the biggest things that will put a hold on your taxes.
I would add, take your time. Don't go in, if you're gonna go use a tax advisor, take your time. Do not go in there and rush things. Like, make sure that they get everything.
Yeah.
'Cause
Make sure you have everything. Take everything with you.
Because it's going to be on you. I mean, they're just going by what you bring in. So
Right.
if you don't bring in everything, that's on you. So if you have any more questions, here is Martha's email. You can email her with questions if you're looking for a tax advisor, if you're looking for an accountant, paralegal services. She does everything. She's awesome. She's just
And if I don't do it, I can find you someone who does.
Exactly. And so she's not only one of our best friends, but not only one of our best friends, but she is our paralegal and our preparer. And so we love it. Especially when we started our business, she's been somebody that we count on for information. Let me tell you folks, if she doesn't know it, she'll find the answer. But she is an encyclopedia of info. So if you're looking for somebody to work with, this is somebody. So contact her for fees, prices, services, all that. And she's worth it. She's totally worth it. So anything else before we go?
That's it.
That's it. Cool. So for everybody, I'm going to put you in the green room for just a second. Don't go anywhere. Thank you so much for being on the show. Really appreciate you being here. For everybody, before we go, I want to remind you that, awesome show. Amazing show. Thank you, Coleta. Thank you. I hope you got some good information out of it. I want to remind you folks that we have our 3 shows back in the air. So if you're watching us, these are all Pacific Standard Times. Let me put that out of the way. Little Mexican Productions. We have our 3 shows on the air. You can catch us on Wednesdays with the Christian and Darren Show, on Fridays with the Card Devo, and on Saturdays put it together live stream, which they're all Pacific Standard Time. I need to change that. Hashtag us if you're watching us, Little Mexican Productions Inc. Or look us up at littlemexicanproductions.com, where we have information of everything that we're part of. We're going through a revamp on our website, so we will be changing some stuff pretty soon. In fact, we're taking some new headshots and pictures today. We want to thank our friend Richard Wayne Kilgo, who is coming over to take our pictures. Oh, absolutely love Martha. She is awesome. She's awesome. So if you need an advisor, make sure that you go check her out. For now, I want to thank all of you for joining us. If you're watching us on Facebook, LinkedIn, or Twitter, please share this show with your friends. Rewatch it so you can get information. If you're watching us on YouTube, do us a favor, scroll down, hit that subscribe button and the notification bell. It'll let you know every time there's a new show on the page. For now, I want to thank all of you for joining us. Thank you, Martha Ormonde, for being here, and we will see you folks next week.